Very good afternoon. You're watching India Market Close, and it's one of those days for the Nifty at least that hitting that 25,000 mark is truly seeming elusive. I want to pull up the Nifty chart for the day, and we're in the red right now, mildly, just about 6-7 points down. But look at the attempts that have been made. Look at that. The day's high is at a delicious, tantalizing 24,999.75, but has not yet hit the 25,000. Will the last hour do the trick? Perhaps not, because some profit booking and some pressure has come in at the highest levels as far as the market is concerned. But nevertheless, I won't say it's been a very bad day. Let's pull up the heat map and just give you an idea of what that day has panned out like and what it has been like, what's really working, what's not. On the sell side, these names have not changed too much. Titan has been one of the losers since this morning. Cipla, after the results and a host of brokerage notes, has not done too well. You're seeing your consumption story also take a bit of a backseat. So ITC, Hero Moto as well. On the winning side, Ultratech, of course, after their additional stake in India Cements, has been faring well, and the overall viewpoint from at least research houses has been pretty positive itself as well. Divi's, L&T right there at the start. I just want to pull up the Bank Nifty very quickly, because the Bank Nifty is the story, right? If the Bank Nifty does not give that kind of a support, can you really cross those new levels? And the Bank Nifty has relatively been strong, up about 0.5%. We'll pull up the internals or the components of the Bank Nifty as well, because think about it. It's all been on the back of whether an ICICI Bank will really fire. The star of the day, Bandhan Bank, a company which was really facing a lot of questions on management change. How would they steady, has really beaten most estimates. The numbers were good, 12.5%, nearly 13% up right now. Hersh, all in all, I think the broader markets, though, is where the real action is today, isn't it?
Plenty of action.
Yeah.
Tamanna, on the broader markets side of things, you're looking at 1.1% on the Nifty mid cap. Let's pull up the Nifty small cap as well. So the broader market's doing surprisingly well, surprisingly resilient in trade today as well. Let's pull up some specific stocks. Of course, we spoke of Bandhan, and that's the first one on my list. If you can pull that up, flying away in trade. It's stock of the day as well. We'll discuss that in greater detail. But we have, along with it, Kaynes Tech. Very solid numbers, 70% growth on top line, margins largely maintained, 13+%, guidance of 15% also maintained. So keep an eye out on this one. This one's been the real star within that EMS pack, now trading at 150 times plus price to earnings. And Adani Wilmar as well, 7% higher on the back of strong numbers. Let's pull up something like a Nuvama Wealth. That one is flying away in trade. Again, very strong numbers from some of these plays where wealth management like Motilal Oswal, Anand Rathi, we saw Nuvama's numbers as well follow suit, up 6%. PNB as well, very strong. Sumitomo, good set of numbers as well. Whirlpool, again, the margins from that 6% plus to 8% plus, very strong increase when it comes to margins and EBITDA growth. J&K Bank declaring a good set of numbers. Some of these PSU banks doing very, very well in trade today. A clutch of them. And J&K Bank within that pack, leading the PSU banking index higher. Anantraj also on the back of strong numbers. Last of Strides declared its numbers today afternoon. Again, good set. Stock is up 3% odd. On those not doing so well, Lakshmi Organics, Arvind, CSB Bank are some of those which are not doing well on the back of results. All of this is results impact. Let me take it to some order wins that are also, right up in the pipeline. Oh, these two, Strides as well as BEL, strong numbers again. Those are doing well in trade as well. NBCC on the back of order win, I believe 400 plus crore order win for NBCC, 411 crore if I recall right, 7% higher. Cyient also, not Cyient, actually Cyient DLM, if we can pull that one up, because Cyient DLM is flying away in trade, if I understand right. That one tie up with Boeing is what is leading Cyient DLM up 5.5%. And if we can also pull up Gensol and AIA, again on the back of order wins, these two are also in focus. So plenty of stocks within the broader markets in focus, Tamanna.
Absolutely. So the broader market is where the action is, but Let me welcome Himen to the show. Himen Kapadia joining us today on what we can expect from the market. He's Senior VP Institutional Equity at KR Choksi Securities. Himen, this 25,000 cliff that the market is trying to climb on the Nifty and unsuccessfully so far, where do you think that pressure is coming from?
Well, frankly speaking, Tamanna, very good afternoon. Thank you for having me. The market is obviously, there is, one is a round figure, two, there is open interest over there. So I wouldn't be very surprised. There are sectoral musical chairs being played, Tamanna. Today you have FMCG, IT facing pressure. You have PSU banks going up, but PSU banks don't have too much of weightage in the bank Nifty. HDFC Bank, Axis Bank, IndusInd Bank are going nowhere. So I think it's yin and yang, nothing else. It's just that everybody is scared of a correction, and then you have a FOMO feeling of being left out. So I think all that is playing out. 25,000 is absolutely important, no doubt, but it's more psychological than technical. But I think you mentioned at the beginning of the show, if the bank Nifty doesn't participate, I think standalone Nifty taking out 25,000 becomes a tall order, and even if it does, it needs to sustain. So, and yes, plus there's a significant OI over there. So it's natural. So I don't think it's a big deal. But if the breadth of the market, like the mid caps and small caps, remain positive, and the way the Dow Jones is, extremely bullish phase, I think things are pretty okay. The VIX is at 13. If it crosses 15, it's a worry. It's not done that. So I'd say it seems copacetic, and maybe 25,000 is just a figure.
What are your picks at this point in this market, Himen? Anything that looks attractive?
Yes, I think a couple of stocks are looking interesting. Firstly, there's a call on M&M Finance. Tamanna. It's gone nowhere in the sense of markets have shot through the roof, and the stock has been consolidating for almost a year. Now things are beginning to look up, and the short-term, the medium-term picture is improving drastically. So a buy on a small decline around 300, stop loss 285, target 330. Risk reward ratio 1:2. I believe this is a modest target, and the way things are poised, if I have a 1 year view, the stock is going to go up much more. And the other stock, there's a buy call on Balkrishna Industries, Tamanna. Once again, we've consolidated a bit. We spent at least half a dozen weeks over here. Now it's setting the stage to take out its swing high, which is coincidentally its all-time high also. So one can buy Balkrishna Industries at 32.90, stop loss 31.90, target 34.92.
All right, Himen, if I can quickly pick your mind with regard to ICICI Bank, because that one's seen such a fluctuation in trade today, right? And large cap, a good weightage in the Nifty as well, quite a big mover. Look at the way it's moved in trade today, and that's for viewer perspective. I'm sure Himen has better perspective as well as charts. Himen.
Frankly speaking, it's taken over the lead of the bulwark of the Bank Nifty, which erstwhile was with HDFC Bank and Kotak Bank for maybe 20 years or so. It's just posted a fresh all-time high a couple of weeks back. Nothing changes. Yes, it's formed a small rounding top. A small consolidation is going on. Yes, the daily picture seems to suggest, I won't say halt, reprieve. I won't say reprieve. Just a cool off for the time being. Range is between 1180 and 1255. The outlook remains positive on the weekly and monthly chart. So the bigger picture remains positive. It's just taking a breather and maybe taking a small time price correction. Hersh.
Okay, so ICICI Bank is seeing its fair bit of volatility. Let's, Himen, talk about Bandhan. Bandhan Bank is undoubtedly stock of the day. Stock was 13% up last I checked. And of course, the numbers have surprised in the positive, and that's the reason you're seeing that kind of strength. Volume's also pretty decent. Are you liking a Bandhan right now? Are you seeing a further upside?
Yes, Tamanna, liking Bandhan, but it's with a little bit of trepidation. I think after 3 years, the numbers have been good. It's waking up. It peaked at around 750 in August 2018, Tamanna. 6 years, Bank Nifty has gone where? And 6 years of woeful, abysmal underperformance. And now they've seen this. But yes, I believe for further confidence to come in, keeping the past history in mind, we need some follow-up price action and a quarter or two more of good numbers coming in. But going by pure technicals, the setup is promising, deeply oversold, promises a lot. It's done that in the past, but like I said, I would be slightly reticent in going too bullish. But all boxes are being ticked on technical parameters, Tamanna. The month is going to end, the weekly chart, monthly charts, everything is hunky-dory. So I'd be more confident about 260, but if this is the beginning of something promising, I believe we've started today.
So Bandhan Bank, in fact, we spoke to the management today, and the shares have leapt on the robust Q1 results. Brokerages have also upgraded their ratings and raised target prices based on improved asset quality, better top-line growth, and strong loan growth. We spoke to the company's MD and CEO, Ratan Kumar Kesh. Listen into what he said.
Q4 on an operating level, we did a great performance. The fact that we had decided to write off an old portfolio, so it looked a little muted to that extent. But our momentum of continued growth with focus on quality continues. I think we've been able to continue that momentum in this quarter as well. And if you see every year, quarter one is generally quite muted for Bandhan Bank because of the cyclicality. This year in quarter one, we have been able to marginally grow our advances, which is a good news. And that is because of multiple factors. One of the key one being some of the guardrails that we put in place, let's say in April 2023, in order to improve our portfolio quality. That took a little bit of a time for the market to and the team and the distribution channel to appreciate. Sure. I think that has been consistently improving over the next 4 quarters, and therefore we continued that momentum in this quarter as well. So that's one important area. Second, I think our focus on improving credit quality and collection efficiency has improved, although there is a slight bit of deterioration in the collection efficiency in quarter one because of heat waves and some of the other factors. But overall, it's remained quite healthy. And the fact that the portfolio quality has improved, our provisions have come down significantly.
All right, earnings in focus. Look at ASK Automotive. Even as we speak, good numbers have come in, and you're seeing a sharp jump up in that stock, 7% up. Look at that chart with that complete jump up. We'll get you more details on the numbers. We're speaking to Kaynes Technology. A lot of action on the other side of this break. Stay tuned.
Welcome back. Thanks for staying tuned to India Market Close here on NDTV Profit. We have the management of Kaynes Tech to give us more perspective with regard to the numbers. We have Jairam Paravastu Sampath, the whole-time director and CFO at Kaynes Technology. Welcome, Mr. Sampath. First off, I want to try and sum this quarter up, both from a top-line perspective as well as from an order win perspective. How's the order book shaping up versus top-line? And where do you see demand traction going in FY25? Just talk to us about that 70% growth you've clocked as well as the kind of order book that's shaping up.
Yeah. Thank you for having me on the show. Basically, we work in different sectors, 6 different sectors. This year, we expect some significant progress being made in some of the sectors which are doing infrastructure and things like that, like railway signaling, aerospace, space, industrial, IT, and medical. And so the order book is also kind of getting filled in with orders from these different sectors. And we are having a fairly robust growth in the order book. I think we closed to about 5,000 crores order book by the June 30th. And we think that this will probably further increase. And by the end of the year, we are looking at anywhere between 5,700 to plus 5,700 plus crores worth of order book. So the revenue growth is not surprising because our business is based on orders which have already been obtained. So, of course, the first quarter was kind of a muted quarter for many of the government purchases and so on, which drives some of our OEMs businesses. But I think now that the government is formed, the monsoon session is on, budget is presented, we think that second, third, and fourth quarter, we'll see some good progress being made in the sectors where we have salience and also we probably do well in terms of margins too.
Mr. Jairam Sampath, very good afternoon. Tamanna here. And thank you for speaking with us. So now, obviously, your revenues, EBITDA, even net profits have shown an impressive growth. But talk to us about the margins. Margins have been flat and, in fact, a slight dip, just 0.2%, so nothing major. Where is that pressure coming from?
Yeah, so firstly, the pressure comes because it's the first quarter. First quarter is about 15-16% of the total year's numbers. So you don't get good operating leverage in the first quarter because most of the fixed costs remain the same. So that's one reason. And the second reason is that during this quarter, this was almost the election quarter, right? Election and government formation quarter. So during this time, the government purchases were muted, especially in the areas that we like to operate. So that is getting fixed, I think. So we think that margins will recover going forward due to both. One, each quarter being rather slightly bigger, and also the kind of sectors that are more value accretive, more business coming into those areas. So as we go through the second, third, and fourth quarter, I think for annually what we had said about 15% EBITDA for the year, I think we should get there.
So you see that bump up coming in quarter 2, quarter 3? Obviously, if you want to go up to 15%, I'm just trying to understand which is the best quarter and whether it's that lumpy.
Yeah, it's generally the last quarter which is the best because it's the largest. It's almost 35-40% of the sales. Mm-hmm. So you get the best operating leverage in the last quarter. But I think if you start seeing some improvements in second quarter, certainly third and fourth quarter are going to be very busy and good quarters as I see them now.
Got it. And sir, where do you go from there with regard to margins? Do you expect steady state to be around 15%? Because over the last couple of years, it's been around that 14-15% kind of band. So you expect it to be around there, or do you expect that you will be able to take it above towards the higher teens?
Yeah, so in the EMS business, it will remain somewhere there, maybe a tad higher if we are able to get orders locked into some of those high criticality, high complexity sectors. Going forward, maybe once the other businesses kick in like OSAT and high density PC board, you can see an upward movement in the at the EBITDA level. So the EBITDA go up, they fluctuate around a base number. So if it was only MS business, it will be around, let's say 15.5%. Around that, plus or minus 1% will be the kind of movement. If it is other businesses like let's say FY28, maybe we get significant traction from our silicon business as well as PC board business. EBITDA is on a blended basis, it will be a tad higher, maybe 1 or 2%, under 200 basis points higher. So it remains to be seen because those are new projects. We haven't yet established them. So at this point in time, I'd just suffice it to say that if everything goes as per plan, you can see an increase going forward too.
Just to speak about the PCB business, Mr. Sampath, you've mentioned you're investing, I think, around 1,200 to 1,400 odd crores in this. Are you looking at manufacturing in India from scratch? When does that happen? Can you just give us a sense of a timeline as far as the PCB business is concerned?
Yeah, the PC board business currently is all imported, and especially the high-density interconnection, the multi-layer boards, which are very highly profitable. They all come from China, Taiwan, Korea, and other parts of the world, including Europe and US. So we are setting up a greenfield project here in India. So we will start this business, let's say, posting significant revenues by the fourth quarter of FY26. It takes about 1.5 years to set up a good high-quality PCB plant. So this will be probably one of its kind in India because most of the other capacities have been on the more on the simpler PC boards, whereas we have gone straight away into the technologically high-end, high-density interconnection boards, because it has been our endeavor to make sure that we upgrade the technological strength for our offerings, because we know that going forward, a lot of players from outside of India will be in India. So we cannot run the business just on the basis of labor arbitrage alone. So we've been endeavoring to, for instance, in OSAT business, we go for advanced packaging. Here we go for high-density interconnection. Even in EMS, we want to be an integrated EMS player. So these are some of the plans that we are working on. And hopefully we will succeed and should be able to see them in action shortly.
Understood. So just on your top line, so you've got a strong order book, strong order pipeline. What's the estimate? Where should your top line broadly lie at the end of FY25?
FY25, we have said it's around 3,000 crores. So okay. If there are any changes, the second half will come to know. If anything better is feasible. But certainly at a minimum, we should probably close at about 3,000 crores.
Understood. And with regard to the OSAT business, you've suggested kickstarts 18 months from now. Of course, the groundwork has already started. Just talk us through how that adds to your top line numbers starting FY27.
Yeah. So just with the caveat that it's a little premature to talk about numbers in that business because we haven't yet made the factory. But we are quite confident based on the business portfolio that we are endeavoring to construct. We will work in the advanced packaging area, and we will have the latest generation. Almost 75% of our capex will be aimed towards advanced packaging, and we'll not do too much of legacy packaging. So that pushes up the profitability too much, but of course it puts responsibility on us to put more technical manpower in aid of, let's say, new product development and so on. It's a little harder to do, but once done, it's much more remunerative. So, like I said, the 2 years will be spent in getting the projects off the ground and also getting customer approvals and so on. And then thereafter, of course, we start with a 40% utilization of the capacity in FY26 end. And then thereafter, we take it to about 80%. And so we will be keenly watching the quality of work that we do so that we, in the beginning stage itself, we build a good portfolio of services with clients who require advanced packaging and so on. So that's our endeavor. Let's say how fast we are able to do it.
Mr. Sampath, just one point on the rail business. I mean, it's contributing about, I think, 8% of your revenue in this quarter. But just want to get your sense of how much potential you see in the efforts of the government to strengthen the Kavach system. Even in this budget, a significant allocation is towards railway safety more than anything else. Is this good news for Kaynes Technology?
it's hugely good news. There are two parts to this. One is the signaling system. The other is the collision avoidance system. We are also investing close to about 40 crore rupee into developing the train collisions avoidance system through technology providers from Europe. So we will be definitely, of course, it takes a bit of time to develop and approve it. But on the signaling side, we already have ready-made clients, and we have pretty high market share among these clients for signaling systems. So as you correctly pointed out, government is hoping to get their act together in terms of doing this stations, different stations upgradation of electronic interlocking. And we definitely plan to contribute a lot to that effort.
All right. Thank you so much, Mr. Sampath, for speaking with us. Now, that's a stock which is definitely in focus today because of the numbers. Kaynes Technology talking about where the growth comes in from. Q1 for margins is traditionally a little bit squeezed. They expect the annual guidance of 15% to be met, definitely. Now, another stock on our radar is Cyient DLM. Stock has jumped after signing a production deal. The company has signed a production deal with Boeing. Puneet joins us for more. Look at that spike there through the day, still about 6% and more up. Puneet, what's working for this deal?
Well, it's a big deal coming in for Cyient DLM. We are seeing the first such order coming in from the likes of Boeing for the company now. It has been present in the defense as well as the aerospace division for some time now, but this particular order, it has guided for over the last 2 quarters in its con call that they are looking to get an order into this space. So this particular order is for production of battery diode modules, or BDM as they're called in the industry, for the 787 Dreamliner, which is one of the major models of Boeing. Now, they have mentioned that this is the first such product of any kind of power electronics for Cyient DLM in this particular space. This will also include design support as well as certification support for these commercial airplanes, which will be awarded by Boeing. When going forward, this is the first, the company Cyient DLM is the first such in India to obtain a certificate for manufacturing circuit card assembly. So definitely a big positive for Cyient DLM, and it has been in the works for quite some time. When you look at the first quarter of FY25, the company's already reported a very stellar set of numbers. The current order book stands at around 2,000 odd crores. The aerospace division grew by roughly 78% compared to the same time last year, while the defense division grew by 79%. So both these divisions contribute about 70 to 75% of their total revenues and are growing at a very strong pace as well. They've also inaugurated a new facility in Mysuru, and one of these products will also be manufactured in that facility. That's what the company has guided for. Other main customers in the aerospace division does include Rafael as well as the Thales Group, and they mentioned that the current top 3 revenue split, if we can just to end this discussion, aerospace forms about 26%, and the company has guided for strong growth in this, defense at 57% and medtech at 10%. So overall, really strong and positive order win for Cyient DLM, and they are expecting this to build on in the aerospace division going forward as well. Back to you.
Okay, thanks for that, Puneet. Himen, if we can come to you with regard to Cyient DLM, this one's flown away after that new order win. What's your sense like on this one on charts?
Well, the knee-jerk reaction seems to have settled down. There's a little bit of paucity of data, Hersh, because I don't have too much to go on. I mean, it's there for a year and a half or so. But interesting thing, because I'll just point out one thing. The all-time and the swing high was at 883 in March, and we went to 870. So the setup is fine. We've been moving sideways without any directional bias. The situation is now improving, but this previous and swing high needs to get taken out if we're going to see anything significant. Setup isn't bad, but like I said, need more data to have a more high conviction view.
All right, point taken. On that note, quick break. On the other side, we'll get you the latest from the derivative markets as well as more on some stock-specific actions. Stay tuned.
welcome back. If you had started this day dreaming of 25,000 on the Nifty, as had a lot of us, it's a bit of a distant dream today. Nifty back in the green, but definitely seems to have run out of stamina on the way to that, finishing line. Not a finishing line, but a big milestone. Agam is standing by to break down the FNOQs and actually maybe give us insight into why. Agam, at the end of the day, not that much confidence for the index to reach that key point.
Well, the idiom close but no cigar does come to mind today, and it does play out very well there, right? Because we did see that sharp knockoff, and it was a sharp one as soon as we were just about to touch 25,000. But perhaps a lot of traders out there, worth their salt, will also tell you that especially when you do have a crucial round level like this, and when you're expecting the index to move above that, you will always face a lot of resistance. And moments like these will come when they're least expected, which means that we don't necessarily need to rule out the fact that the Nifty could go about 25,000. It's just that it won't be so easily predictable. And that is the nature of the markets at the moment. So yes, we did come off by quite a bit on an intraday basis, hitting that mark and falling shy by as much as 0.25 point. But we're seeing not too much change as far as the futures open interest is concerned. The Bank Nifty, of course, on the other hand, is now up by just about 0.25%, but at one point in time, it was actually providing a good lift to the Nifty as well. We're seeing further unwinding as far as the open interest goes out here. Well, moving on, when it comes to the options market, naturally, perhaps on expected lines, a little bit more traction around the 25,000 mark, where calls and puts have been written. We have another couple of sessions to go before we see the Nifty weekly options expiry. We will know whether or not this mark becomes crucial. Now, remember that until yesterday, most amount of open interest was around the 25,000 call, which also perhaps would give you an indication that after the strong surge that we saw on Friday, there would be call writers who would move out of their position of those which they've sold into the 25,000. But that wasn't the case. And in fact, today, those call writers have have strengthened in terms of their positioning. And of course, on the lower end, we continue to see some amount of traction when it comes to puts. Coming down to stocks, again, a relatively mixed market when it comes to stock futures. So maybe we can have that on your screen as well. And that will give you an idea about how things are faring. So, shorts for something like an India Cement, though marginally in the red. Same for UBL and Shree Cement. Sun TV and PI Industries, on the other hand, looking at longs. We're also looking at short covering for Vodafone Idea, Bandhan Bank, PNB, IEX, and City Union Bank. So it's a mixed day of trade, and that's kind of reflected as far as the Nifty advanced decline ratio is concerned. It's been a relatively quiet day as well. We don't have too much going on, but we move into another crucial week where we will have the outcome of the Federal Reserve as well as several other earnings to come through. So not ruling out volatility just yet, but perhaps a little bit of disappointment in today's day of trade.
I have to ask you, what does close but no cigar mean?
It's exactly that. Well, you're tasting victory, but you haven't. You're just about to be victorious, but you haven't actually gotten that victory, and which is why you will not be handed a cigar to smoke.
So okay, in this story, you get the victory and then you get the cigar.
That's right.
Okay, so no cigar yet. And anyway, we don't want to encourage smoking at all.
The kids here, Tamanna.
Really? Are you talking about yourself?
Yes. So
okay.
Let's not get that. But let's mark out Wonderla holidays, actually.
Oh, terrible. Definitely no cigar, no nothing for Wonderla holidays. Those numbers are looking painful to see.
Right, so 7% down on revenue, that one at 173 crore. You're seeing EBITDA down 22%, margins down, 11+%, in fact, almost 11%, 10.5% odd down on the EBITDA margin, absolute margin from 63.4 to 52.9, and net profit down 25%. So and you can see the reaction on the counter as well, down 6%, just about seeing a bit of a recovery post that fall. So Wonderla in focus. Let's take it to Hemen. Hemen, on charts, this one, anything interesting?
Well, the move up till now has been wonderfully la la land, Hersh, if you see, a prolonged distribution. I think, okay, even before the results, somewhere the stock has stagnated. I believe there's a head and shoulder top pattern being formed. But yes, for this to fructify, we need a weekly close above 800, which currently doesn't seem to be on the anvil. Like I said, we've been corrected for almost 9 months. So somewhere we are paying for the time of a time price correction for the massive move that we've had. Isn't going anywhere, remains range bound. A close below 800 could mean problems. Till then, I believe it will drift without any this is a price action.
Interesting clutch of stocks that are moving in the afternoon session. Let's pull up Mazgaon Dock, RVNL, IRCON, and just see some of their intraday charts as well. Yeah, so you're seeing some interest building over there quite, quite substantially. RVNL as well, heading towards its highs of the day. Let's pull up IRCON. And these are stocks which were quite tepid through the day. All right, let's get Gurmeet Chadda in. Gurmeet Chadda now joins us, Managing Partner and CIO of Complete Circle, on the conversation. Gurmeet, very good afternoon to you and great to speak with you. Let's start with the overview of the market. Do you think we ran out of a bit of steam?
Yeah, maybe I think it's temporary. I think 25,000 is a milestone eventually will happen. But also I think the numbers have been, if you see the Q1 scorecard of earnings, they have been a little soft, whether it is the large caps or so far the numbers. If you see, almost 60% have seen earnings downgrade, and I think that will weigh on the market. Even in large caps, we had Reliance and HDFC, which were very soft. ICICI Bank obviously probably led the recovery in Bank Nifty today. So I think earnings led. I think, and I think the big trigger for market is right now they are factoring in a rate cut in September by Fed. And I think against that backdrop, you've seen a bit of a pro-equity thing despite the budget-related worries. I think that if that thesis gets challenged and if there is a pushback by the Fed on the rate cut and which we have seen earlier across June, there could be a bit of a inching up in bond yields and some small correction. But I think milestone will come. I don't think so that's something we can debate. It can come anytime now. But I think anchoring to earnings and not overpaying, I think, is the key at these levels.
Gurmeet, I get your point. It's a matter of when rather than if, as far as the milestones are concerned. And frankly, that's just a talking point. But I want to go back to the point you made on the numbers and what the quarterly numbers are telling us. And let's start with what the financials are telling us, the banks specifically. Now, some seem to have surprised on the positive, like a Bandhan Bank on a tear today, ICICI Bank, and some have left a lot to be desired. Maybe IndusInd would be one of them. How are you seeing the overall picture?
Differentiated. I think in private banks, leadership will be with ICICI Bank. It's been quarter-on-quarter industry-leading metrics. Even Axis was softer this time around. So if you see loan and deposit growth was approximately 14-15%. Again, outgrowing the industry. The NIM was 4.4, although it was flat, but amongst few banks which have managed to hold on to the NIMs even in this challenging environment. All subsidiaries doing very, very well. Mutual fund, insurance, general insurance. There was some bit of a controversy regarding the ICICI Securities, delisting. But I'm saying overall, very healthy asset quality and industry-leading operating metrics. And if you see almost 15% growth in operating profit. So I think it will continue to command that 3+ book value, which at one point of time SDFC used to do. I think SBI numbers would be interesting. If they can deliver sequentially better numbers, I think the some re-rating may continue for especially the tier 1 PSU banks in that space. And I think my main focus would be on capital market participants also. There's a very sharp run-up in likes of CDSL, CAMS, etc. Whether they can sustain those kind of numbers. While the top line numbers in terms of number of clients getting added continue to be very robust. We are adding almost 1 lakh clients daily. So that's the other space I'm going to. And as I said, be earnings led. I think in this market, that's your biggest hedge. Anywhere where there's the scope for not performing, not living up to your valuation multiple, a market will punish you. We've seen that with a lot of stocks, including the larger ones. So right now, the error for any miss is very minimal.
Sure, Gurmeet, Hersh also joining in. I want to understand from you one big hit and one big miss as of now in terms of earnings, whether sector, whether specific stock, something that really stood out for you, hit and a miss?
It's actually across the space. I think one hit has been in one defense name, which is Zen Technology. I mean, what an amazing turnaround. I think nobody believed the promoter a couple of years back, or maybe a year back, when he talked about AI-driven, anti-drone systems, doing some great work on simulators as well. They have a market leadership in tank simulators. They have almost a 95% market leadership there. And look at the number of patents they get. They've applied for like 150 patents in last 10 years. They've got 15. So it's a very IP-led company, and I like companies which are IP-led because that's when you get that re-rating. I think there were some very good numbers from some of the the environment recycling names. ICICI Bank I mentioned. I think it was very solid set of numbers. I think Infosys surprised. I think after quarter on quarter, I think that led to a bit of a re-rating of IT. So IT is also getting a little selective. Nobody was willing to touch Infosys at 1,200, 1,300 levels. And I think with Tech Mahindra also, with some leadership change and Mohit coming in, I think possibly some valuation cover. So I think it's you, as I said, focus on the guidance more, focused on earnings more, and anybody who's demonstrating consistency, be specific about.
Gurmeet, that was your hit. I'm going to come back to you on your miss, but let me first take it across. We have Zentech, which Gurmeet, you just spoke about. Stock zooming in trade, solid Q1 results, management confident of their FY25 guidance. Anushi, talk to us about what's working for Zen.
Hey Hersh, so as you mentioned that Zen Technologies was locked in the upper circuit, 5% of an upper circuit behind its Q1 FY25 results. So I'll come back to that. But before that, even if you look at its past 1 month record, the stock has been surging about 25%. Now, this is despite the 160% overall increase it has seen already in its stock price. And again, if you compare its return in comparison with other defense players, which has seen a little bit of a cool down after the kind of stock rally it has, say, maybe like HAL or Bharat Dynamics or Bharat Defense, they have all seen about a 7 to 8% decline. But Zentech has remained on its solid, strong trajectory over here. So if you go back to the management commentary, we'll wait for the conference call today for more details, but if we go back to the management commentary, that remains on a stronger side. Now they're set to open new revenue streams with new products going forward, so that would be a focus area for the business going forward. Along with that, they're targeting over 900 crore of revenue for FY25. So taking FY24 in account, this is about 105% of a growth number that we are looking at. And even if we go to FY26 to 28, they see about a 50% of a CAGR growth rate continuing. But other than that, let's also see the addressable market opportunities it has. So if you take its simulator market, that is estimated to grow to up to 14,000 crore as compared to 8,000 crore in which is the current market size as of FY24. This is as per the Motilal Oswal's research. So there are 2 to 3 defense players in the simulator market, in which Zentech had secured about 11 out of 12 contracts, with which its market share in this area was up to 80%. So that remains on a stronger side for the business. But even if you see the counter drone system, so that market also, it expects another fantastic 5 years going forward in this segment. Here the market is estimated to be around 12,000 crore in the next 5 years, and there are about 5 to 6 players. But coming to numbers today, which is why it is in focus, 91% of a revenue jump, while the net profit has seen about a 57% jump. Order book also, if you look at 1,158 crore of an order book, while their order secured was a tad bit about 10 crores, so which is on the muted side, but they do expect the orders coming in the Q3 and Q4 season, so that remains on a watch out. And again, strong numbers, yeah.
Yeah, absolutely strong numbers. So Zentech in focus on circuit today. Thanks for that, Anushi. Another company that we should quickly talk about is BEL. Look at Bharat Electronic numbers that have come in. Let's see how the stock is performing. Not bad at all, about 4% up. Come down a bit after that initial spike, possibly when the numbers came in. Revenue up 20%, EBITDA at 41% up at 937 crores. The margins have also improved quite impressively from 18.9% to 22.3%, and net profit up 46.2%. BEL also looking strong. Gurmeet, this is again a space which has run up consistently, but at least in BEL's case, one could say that the numbers are justifying the kind of enthusiasm on the company?
And not in all cases. And mind you, this business is lumpy. You may have a soft quarter also because a lot of orders will have long gestation period. Some of them have a lot of risk clauses and return clauses. So you probably need to, go level two. One area which is interesting, if you go down the curve, so India has a 30% offset clause, which means you have to make 30% components in India or for any MNC work. Of which I think by 2027, almost 80,000 odd crore is still pending. And Defense Ministry has a clear list of authorized companies who are eligible for that offset. So I think that's where probably the next opportunity lies in defense. Go level two, level three. There will be some unlisted names as well. And that 80, 90,000 crores, and there are a lot of companies with, let's say, 10,000, 5,000 crore market cap. Those orders can mean significantly for their top line and earnings. So I think in the top names, I think probably the next 5, 6 year good news is in the price. But if they can demonstrate what probably BL is done just now, quarter on quarter, the key here is consistency. Defense as a space, I personally doubt you can do it quarter on quarter because the very nature of the business is pretty different. So I would probably take some money off the table because it's been a 3, 4, 5x in last 1.5 years. Not exit that space and maybe rebalance it and see what are other opportunities in the market.
Himen, BEL and Zentech. Any views on either of these two?
Zentech is a easier one, actually, Tamanna. Linear uptrend, high tops, high bottom. It's like a copybook. Beautiful stock, nothing much to look at. What I mean to say is, safely ensconced in a mature uptrend, continues to do so. No worries. BEL outlook positive. Thing is, we've had a phenomenal move from what these are adjusted for bonuses over 4 years, 20 to 340. So that's why we are sort of slightly indifferent. But read this as a correction within an ongoing bull market. 340 all-time high, 340 swing high. We take out 340. We start the move towards roughly 395. So looks good, but maybe it could take a little bit more time to consolidate. But once we see a weekly closing about 340, Tamanna, it won't wait anymore.
All right. In fact, while we are on defense, Gurmeet, if we can take your views just overall on valuations on both defense, rail and PSU Bank. I know these are large segments in themselves, but you have defense as well as PSU banks really buzzing in trade today, and we've seen how valuations in some of these pockets have really run up. Just broader sense, what should one expect just in terms of either results or valuation correction, if any? What's your view on this?
Be some time and price correction both. So if you look at, for example, of the overall market cap now, the entire PSUs are 10.3%. Right? It is almost 3x more than what they were a couple of years back. So obviously there's been a massive run-up, and a lot of people have missed the bus. But doing entering right now with FOMO, with stocks across the board going up, would actually be a little counterproductive for the portfolio. So my sense is be very selective. As I said, in defense you have to focus on the offset clause, which a lot of companies will benefit. You have to go level 2, level 3 and figure out what are those defense contracts, what are the products where there is more import substitution and will be the beneficiary of these. Railway stocks, I think purely on railway capex, I think there's still some steam left. Government last year did almost 14 kilometers a day of railway tracks. And even in this year railway budget, if you go level 2, there's a lot of talk of connecting the tier 2, tier 3 towns and villages, which means there are a lot of companies like Ircon or Railtels of the world, which may still be in focus purely from the railway infrastructure point of view. Right? We've seen even in Titagarh a lot of fluctuations because the valuations caught up. And, so I think it's little selected there. PSU banks probably is one pocket where I still have a lot of valuation comfort. There are at least 3, 4 PSU banks which have demonstrated 1% ROA. And this is excluding treasury income or one-time gain. It is more on core operating metrics. So if they can demonstrate 1.2 kind of an ROA for, let's say, a few more quarters, they can also command, let's say, around 2 book value. A lot of them are still at around book value. So I think of all these 3 spaces, I'll probably be a little more comfortable with top 2 PSU banks. Let's say SBI and Bank Approved.
The other couple, you mentioned SBI, Gurmeet. Since you spoke about PSU banks, which are the ones which are giving you valuation comfort right now?
So I think I would wait SBI numbers this week. I'm actually very impressed with what they have done with YONO. So if you see on debit card spends, their market share is 23%. On online, transactions, their market share is continuously increasing. On POS terminals, they are gaining market share. The what thing which I want to focus on is on the deposit mobilization. I think that's one metric I will watch out. If they can demonstrate increase in market share on deposit mobilization, I think that would probably give you more comfort. And in their market leadership now in mortgages, doing pretty well on the retail portfolio. So which is a high yielding portfolio. There's a lot of focus there as well. And it's still at about 1.3, 1.4. Listing of SBI mutual fund this year, if it happens, I think the subsidies, if you add up, that's about 200 to 50 bucks on a SOTP basis. So I'm pretty constructive, provided as I said, we see consistency, and one area which is always of concern is any accident. I just hope nothing major really happens over the next few quarters.
Sure. And Gurmeet, with regard to one play which has been in focus, Ultratech, India Cements, that entire cement play, what's your sense, one, with regard to the acquisition itself, pricing slightly at a premium, etc., if you can give us your views on that. And within the overall cement pack, is there a particular one or two players which you're really liking, both in terms of valuation as well as future growth potential?
So I think currently the focus should be on what can get acquired. Because if you see Adani Bank, they acquired Penna and Sanghi in last 1 year. Valuations are roughly between $85 to $100 a ton. Ultratech now, of course, doing India Cement and a few others. And I think the South focus is pretty evident. I think the focus was more strategic in my view. Obviously, there is a view in the market that they paid a little higher price. But Ultratech is also known for one of the fastest turnaround of assets. Their asset turnover ratio is among the best, especially for acquisition done. Right? And as your screen shows, it's showing $103 a ton. There are a lot of players in South which are at, let's say, $50 a ton, like Sagar Cement, for example. If you see one of the more power efficient and now turning around post the Andhra Cement acquisition is around $55 a ton. Very power efficient, one of the lowest cost of operations. The EBITDA per ton now picking up. So that's, I think, one acquisition candidate. Second, as I said, per capita cement consumption in South is amongst better, relatively better, and likely to pick up even more. So it's just about getting that dominant position in South India. So I think the smaller players should be focused now in terms of, let's say, below replacement cost. Cost of setting up a new plant today is $190 to $100 a ton. And eventually, once the consolidation happens, when, let's say, Ultratech moves towards 200 million ton and Adani Group moves to about 141 million, you will see pricing coming back. So in the immediate term, maybe the smaller regional players, and maybe once there is more consolidation, maybe the larger ones.
Okay, so pricing will come back. That's the longer term cement play. Meanwhile, as we're heading to close, look at what's happening in the market right now. Railway stocks are running, RVNL, IRCON. Some of that capex play story seems to be coming up to the fore. So let's pull up an NBCC and see what's happening right now. Titagarh also doing fairly well there. NBCC up about 7.5%. Defense companies have sprung to life. Not just a BEL, but look at an HAL, Garden Reach, Mazgao, that entire space looking more interesting as we wind down to close. What's given up gains? Among other things, the Bank Nifty. Let's pull up the intraday chart of the Bank Nifty. Mazgao Dock now at 10%. Let's pull up Bank Nifty and there you see Bank Nifty definitely giving up quite a few of its gains. So little surprised that your index, your Nifty has dipped into the red. Before we wrap up, Himen, in another few minutes, just want to get a sense of what is your play for tomorrow.
I believe better to avoid the Bank Nifty for a day or two. But if I were to look at something of a BTST, Tamanna, I think Asian Paints is breaking out of a 14-hour consolidation phase, 14 hours. So the early charts, there's a breakout coming in, indicators are supporting. So one can do BTST on Asian Paints, Tamanna.
That's a good idea. BTST on Asian Paints is one idea which is coming in. Gurmeet, I won't ask you for a call for tomorrow, but since we're at the start of the week, do you think that there is scope for a comeback in the defensives, the consumptions and the farmers of the world?
Pharma, I think again the valuations have got. I think there's very few pockets in market where you can say that valuations are really reasonable. So we've been a little selective because earnings have been short. I think this Mankind acquisition of looks interesting right now. For a few quarters, I think it could be a bit of a drag on EPS as they borrow, they issue more equity as well as they use up their treasury. So there's an impact there for the near term. But long term seems to be a great acquisition from a woman health and gynae portfolio. Secondly, I think some of these CDMO names have shown more molecules in phase 2 and 3, which means that there is a higher chance of commercialization. Whether it is Newland, whether it's a Shilpa Medicare. Loris, I'm still circumspect, but let's see how things shape out. And in consumption, I think we probably will move into, as rural economy gets more money. I think the likes of ITC, Imami, Tata Consumers of the world. Also, it gives you a bit of a defensive play in the portfolio with markets running up.
Okay, so defensive play might still be in the offing. Thank you so much, Gurmeet and Himen, for speaking with us today. We're winding down to a trade which is perhaps not what was hoped for at the start of the day, but can't complain too much because you haven't seen any major sell-off at least. And you could likely see the Nifty at least close in the green, completely flat. The story here is completely flat. The bank Nifty is, in that sense, a culprit, couldn't really run up and then gave up most of its gains through the day. I'll just quickly pull up the mid-cap and the small-cap indices as well before we get Hersh in, where, the broader markets are actually relatively looking better. We'll pull up the advanced decline ratio and give you a sense of what that's looking like, because given the small-cap index a bit about 1%. That gap narrowing towards the end, Hersh, and that's where the pain point is, right? You still have advances over decline. So all in all, I would say not a bad day on the markets. And, we have to get over this thing of hitting a benchmark and ticking a box, because it's been a one-way ride for the Indian markets in any case. And every day doesn't have to be a party day. Especially don't expect it on a Monday.
Yeah, but it's not a bad day at all, Tamanna. It's just that the anticipation was that we'll hit the 25,000 and we didn't do that. That's possibly the only downside to the day. But outside of that, we've had a fairly solid start to the week. Positive on both indices, just about positive. But let's pull up the mid-cap.
Scraping through the finishing line.
Sure. And but let's pull up the mid-cap and the small-cap, because that's where at least some of the action was. They've managed to close well in the green, well, 1% higher on the mid-cap. A similar kind of a number on the small cap as well. The Nifty Bank, though, giving up some of its gains, but still closing well in the green. So that's the texture. Let's pull up the BSE 500, top gainers, top losers, if we can, before we wrap. And look at some of those PSU names, which are really ruling the roost. RITES, Mazgon, RVNL, IRCON. You've seen solid gains across all of those, at least in trade today.
I would just add that RITES was buzzing right from the get-go.
Yes.
So maybe I think they have a board meeting coming in, and perhaps there's a talk of bonus share. Bandhan Bank right from the get-go. Yes. One of the surprise candidates, I would say, is Mazgaon. They've hit 10% towards end. Mazgaon, Rail Vikas and IRCON were not really expected to run up to that extent.
Yes, and even within the losers, a lot of them being names where results have come out. You've seen Equitas, Lakshmi Organics deliver slightly disappointing numbers, and on the back of that reaction, New India Assurance really ran up last week, and you're seeing a bit of a correction there as well. Jindal Stainless among the top 3 losers on the Nifty mid-cap. But with that, completely out of time on this edition of India Market Close. By the way, today is also, while we didn't clock the 25K, we did have Tamanna who clocked 25, at least that's what she told me earlier today. So happy birthday, Tamanna, from all of us here in the studio as well as in the newsroom. Wishing a very, very happy birthday, and viewers as well. So from all of us, wishing you a very happy birthday. But that's all, folks. That's all the party that we get.
Thank you so much, guys. 25,000, we'll have to wait for another day. But yeah, thank you so much.
Right. So with that, it's a wrap. Thank you so much.